If you have ever wanted a clear mechanical framework to follow so that when you hop on a blank chart, every single time you know what to do. You don't have to get caught up with endless hours of complicated forecasts. If this happens and that happens, you just follow the framework. So you are reacting to price rather than constantly having to try and predict. Well, today is your lucky day because I'm going to take you through the exact process that I use every single day. I'll follow the same framework and apply it to the unique price action that we see every single day, okay? And I'll take you through 2 trades that I took the other day, just in one session. Okay, so by the end of this, I promise you this will give you so much clarity and confidence when you are, approaching your charts every single day. So my name is Matt Dunleavy and I am the founder of Photon Trading, and we help traders get consistently profitable using the power of mechanical strategies. Alrighty, so let's dive into the charts, and this is euro dollar on the daily chart. So very simply, we do not need to overcomplicate our analysis on this time frame. We can see that we are clearly trending to the upside, making a series of higher highs and higher lows. So all I ever want to do, the first thing is I go to my highest time frame, and I just want to know what is the current swing range, right? That is always step number 1 for me. Where is my swing high? Where is my swing low? And I can see that this was the last break of swing structure here on the daily chart, okay? So now I know the current swing high and low that I have is between this low and this high here, okay? So this is a swing low that achieved its job, it broke structure. So this is now what we call a strong swing low. So when we are in a bullish market and price is pulling back, if that bullish trend is going to continue, our expectation is that this low will hold, right? And we can try and then get long once we think the pullback is over, right? Then we can look to get long and try and target that weak high, right? This is a weak high. Why? Because it's failed to do its job. It's failed to take out the low. So that's how bullish markets work, right? The strong lows hold, and then eventually we target the weak highs there to the upside. So daily chart, I instantly know my swing trend is bullish. So ultimately, I'm looking for price to continue that move once we think the swing pullback is over. So what we can also see from a structural standpoint is there's not a lot of clear internal structure to necessarily work with, because we kind of just have this straight pullback, right? Usually you would see something like this where you've got some clearer internal structure, and then to signal when the end of that pullback is finished, we would look for what? We would look for the internal structure to shift bullish. Once we get that bullish IBOS, that internal break of structure, that's a very good signal, right, that the swing pullback is over, and then we look to target the high. That is, again, the same framework that I follow every single time. So in this case, we don't really have any super clear like that, kind of like we did with this one, right, where we got that clear shift in structure. So here, do we have anything? Do we have any signs of bullish structure shifting? And we do have a bullish fractal shift in structure, right, where we get that bullish change of characters. So it's better than nothing. It's that first sign that we're seeing, that fractal structure shifting in our favor. And then again, we can see we've had another little break there as well. So we're starting to see that series of internal higher highs and higher lows forming, right, showing that potentially order flow is now shifting from bearish to bullish. So that's kind of everything from a structural perspective on the daily chart. So then the next step for me is to outline relevant supply and demand zone. So my eyes instantly always go to the extreme of the swing range, and we can see this inside bar, this pivot demand zone, right at the extreme. So when I say extreme, I mean it's basically the unmitigated extreme. It's the most bottom zone near that low. What have we done? We've just tapped into it and mitigated it. We had a nice bullish reaction. That's why we got that bullish change of character, which then created what? It created another daily demand zone, right? That led to that bullish change of character. And as we can see, price has then pulled back into that zone, mitigated it, and continued again to the upside. And even within that, you can see there was another demand zone here that was responsible for what? Responsible for the break of that high. Price has pulled back into it and moved to the upside. So can you start to see now how you're already building the picture that the daily chart's bullish, we've mitigated the extreme demand at the strong swing low. That demand has now been hit. We've had a bullish shift in fractal structure, right? So that's that first little sign that structure is starting to shift bullish. That created a fresh demand zone. Price has pulled back into that demand zone and it's held, right? It's been respected and then made another higher high. That in turn created this fresh demand zone here. And again, price has pulled back into that, filled up those orders, and then made another higher high there. So we're starting to see that bullish order flow really holding and being respected. And we can now have more confidence that perhaps this swing pullback is now over, right? And then we can look to try and get in this bullish order flow to target the weak daily high. Now, there are daily supply zones to the left, okay, that we have to be aware of, right? We can see the supply zone here. that did cause that break of structure there, and we're currently pausing and getting a little bit of bearish pressure from there, right? You can see that wick coming in. But the thing is, when order flow is bullish, old supply zones, old fresh supply zones to the left, unmitigated zones, whatever you want to call them, what do they become? When order flow is bullish, old supply zones to the left, they simply become reaction points for pullbacks to demand. Okay, if demand is in control and if order flow is bullish, we're just expecting a quick reaction back into demand, and we expect demand to hold and then supply to ultimately fail, right? That's the expectation. So there's always a possibility, of course, we could get another leg, but that wouldn't be my primary forecast. So that's why I'm saying, don't overcomplicate things, don't get paralysis analysis. Have your rules that dictate what your primary expectation is, i.e. when order flow is bullish, supply zones are just reaction points for pullbacks, then you know how to make decisions about it, right? You're not fearful trying to get long and trade against the supply zone because you understand probability still, but the primary expectation will be that it's just a pullback to go higher, right? Again, another level of supply, it's likely just a pullback to go higher because the objective is complete, the pullback is likely now done, and we're expecting that next move up towards the high, okay? So that's how you can then approach that. Now it's a bit tight within here, but technically we do have another daily zone in here as well. So I've kind of formulated my daily bias now, right, for today, that overall we're coming off a strong area, we've mitigated the extreme, order flow shifting bullish. Yes, we are currently within a daily level of supply, which is not ideal if you're looking for longs, but I'm expecting it's likely just going to give a reaction back into demand before we continue higher, right? It's looking very, very bullish here on the daily chart. So with that in mind, we can then jump down to the 4-hour chart here. And again, we can start to see that shift in bullish structure here on the 4-hour chart, right? We had that initial 4-hour break of structure. We've come back in and done what? We've held. Demand has held. Once that holds, what do? We target the week high. That high is now broken, so we've got another break of structure. I'm just going to draw these on so we can keep track. And that's what we can expect, right? If we can see that fractal bullish order flow on the daily chart is doing that, then we know that's basically our way of viewing the 4-hour swing structure, and then we can confirm that when we come down and look on our chart here. So when I look at the 4-hour, it's the exact same thing. What do? What's first step? Can you remember? It is to figure out what is the current swing range of the time frame you're looking at. So step 1, we can already see that was our last 4-hour boss. So what does that mean? Well, it means this is my 4-hour swing low, right? And this is our strong low because it led to a break of structure. It did its job. So if the 4-hour bullish trend is going to continue, what do we expect? We expect that strong low to hold, and we expect price to then make that higher high. Okay, so very easy now to formulate your bias. The 4-hour and the daily are both giving us, that bullish bias, right? So really, longs are my main focus. Okay. Now it hasn't reappeared on this chart, so Trading View loves to do that. But we can see that daily zone. I'm aware of it, but remember, I'm not concerned about it because we've had a reaction from it, but I only expect the reaction from this daily supply zone to the left to do what? Just to pull back into demand, and then I expect that move higher. So we've got our structural range. Where are the relevant demand zones that price can potentially pull back to for us to look for a continuation of that move within the current 4-hour range, right? What I like to do is sometimes use these pretty little circles just to kind of make it very obvious with that current range you're in, right? So I know I'm looking for somewhere within here to capture that higher low. Well, the 4-hour zones aren't super clean on this one, right? We've had a clean pivot zone down here that's already had that mitigation that then led to the break of structure. So I would just look at this next sell to buy candle here as my next 4-hour zone within the daily zone, okay? Now, something to bear in mind, especially when this is quite a tight range, especially for the 4-hour chart, right? It's not that big. They kind of got bigger obvious swings here. It's a little bit tight. So when you get that, you have to understand that price does not have to come down and mitigate your refined pivot zone. When you get bullish order flow, you see all of these ranges, right? Like the high to the low, price can just mitigate that range and then go. Then you get this next bullish range here, right between the high and the low. When price initiates out, it just mitigates the range and it can go, right? Prime example here, it doesn't have to come down to your refined zone. So if you have an overwhelming bullish bias, be aware, and ideally we want to see price come down to here, but if you start to see signs, before we get there on the lower time frames, you get your confirmations that potentially that high low is in place, then you need to be aware of that, right? That we might not pull back that deep, okay? So daily chart's giving us a bullish bias, 4-hour chart is giving us our bullish bias. Okay, we've pulled back into daily demand already. Ideally, I would like to see price come into this 4-hour demand, right? And then we can look for a continuation of that move. So now let's take a look at the M15. And the M15 for me, if I'm using my day trading strategy, is kind of what gives me my main immediate bias for that session, for the day, the direction in which I want to be trading in, and the POIs, those zones in which I actually want to be taking, executing from my actual trade idea. So we just zoom out quickly just to make sure we've got our M15 structure. So in this case, it actually lines up the same with our 4-hour structure. That's not always the case, but in this case, this is my M15 low. And a nice little tip that can help you if you get lost a lot is to have these templates that basically say, right, that's your strong swing low, just so you don't get too caught up or too zoomed in. And then up here is what? This is going to be my weak M15 swing high. Because remember, what is the first thing that we want to be doing every time we look at our new time frame? Is we want to go, what is our current swing structure? That's always the first thing that I care about, okay? So we know we're working between our swing high and our swing low. Now we can look at the internal structure as well. And you can see what happened in here. We had that bearish breaker structure there, right? We got a bearish IBOS. So when you have that, what does that signal? It's a very good signal that the swing pullback is starting, right? When the internal structure shifts bearish. So typically the expectation is when you get that bearish IBOS, we then expect the internal structure to remain bearish to do what? To facilitate the swing pullback, ideally down to discount demand, maybe somewhere within the discount of this range, right? And then we look for the internal structure to shift bullish. See that bullish order flow coming in, signaling the end of that swing pullback, okay? And then we can look to get long and follow these internal ranges, these bullish internal ranges, all the way up until it takes out that weak swing high, okay? Now, think about the logic behind that framework. Why do we follow that framework? Well, when that high breaks and we get that higher high, that higher internal high, what does that low become? That low becomes a strong low because it did its job, right? Because it broke structure. So if this low down here is a strong low, then when price starts pulling back, what do we expect? We expect it to hold. We expect that low to not break. So that's why every time then you then get a higher high, we expect each of these lows to hold, which means we can trade with confidence following those higher highs. Now, does this work perfectly every single time? No, of course not. It's not supposed to, right? It's markets, but it gives you a framework to know how to make, how to make a method of the madness, as I like to say, right? People get very caught up with thinking, markets don't move this way, they don't move perfectly. Yeah, you're right. But you need a mechanical framework to follow to know how to manage your expectations and to know where to apply your risk in the right way, right? We are dealing with probabilities. Anyway, so we've had an M15 breaker structure. We know we're bullish. We've had an internal breaker structure to the downside. So right now that instantly tells me the daily's bullish, the 4 hours bullish, the M15 swing, they're all bullish. But right now, what phase are we within on the M15? We are in the swing pullback phase, right? Because we've had that bearish IBOS. So I would be looking to try and play some shorts, okay? But if you mark on the premium and discount of the range, I know it's a little bit faint, but hopefully you guys can see this. But basically marking out the 50% of the range, we know that once price pulls back within the discount, there's a real increasing probability, right, that price is back to value and that swing pullback is finished and that higher low is going to form. And we really need to start thinking about longs when we get down there, okay? So just hold that in the back of your mind for a minute. I'm just gonna hop back onto the 4 hour chart because as always, TradingView loves to not show my save templates on the time frame I want them to. It's still not showing there. We have done our structure in M15. We have our 4 hour zone here. Are there any relevant M15 zones? Well, what I'm just gonna do is I'm gonna fast forward price a little bit to just before Frankfurt Open, as that's basically when I do my analysis just before my session. So I am currently living in London. So I'm on obviously London time. So the Frankfurt Open is always 7 a.m. UK time, okay? So about 6:30, that's where I'll share my analysis with the community, where I've done my markup, okay? So I'd have all of this drawn on and explained. And in this instance, what would my brain be thinking? It'd be thinking everything I've just said, right? We've had that internal breaker structure. We're pulling back, so I would now be looking for another quick move, simply down into the discount and around this level of 4 hour demand, all right? So if the opportunity presents, I will look for a quick short, a quick little scalp, to target this demand, okay? Once price gets there, that's when I want to start thinking about the longs, because for me, that's the bigger trade, that's the higher probability trade. Once that pullback is over, we'll look for our confirmations within here to try and capture that high low. And that's really kind of, as complicated as you want to make your directional bias, right? Structure leads the way. So once you have your directional bias, the next step is to identify potential areas of interest, right? Those POIs, those zones of where you can play that directional bias from. Like, it helps you to time your directional idea. Now, at this point in time, when the market's here, I'm not really interested in any shorts, and I'll tell you why. Because we had that initial IBOS here, okay, and then we've pulled back. So at this moment, this is my weak internal low, right? and price is now just ranging. So obviously I don't want to buy because this is a weak low and there's nothing going on. I want to wait for that low to break and then look for the long, okay? I don't want to be buying from a weak low. And right now, do I want to short from this supply zone or from this supply zone? Well, no, not really, ideally not, because they haven't broken anything yet, right? They haven't broken this low. Right now, we're just moving sideways within this range. So these types of moves can play out, but I'm not massively keen on them. What I would much prefer is if price can break below this low, then what do we have? Well, then this becomes our new internal range, right? That's the high that led to the break. Okay, and then that means that these supply zones actually caused something significant, right? They broke out of this internal range here, and then I would look for price to come back in, if it makes sense, potentially, and then look for another quick leg, okay? So the best time to play that swing pullback phase, right, to short when the swing structure is bullish, ideally we want to be doing it at the top. We want to be selling in the premium, right? Because right now, if this low breaks and we sell, where are we? We're already in the discount, and there's already an increasing probability that the high low is going. So the best time to trade counter trend is when you're trading pro-internal, so the internal structure is on your side like it is now, but it's kind of at the top of the move because then you have the risk to reward to target down to the discount, okay? So shorts already aren't looking too great, but that would be my idea, and then just setting my alerts down here for the longs, okay? So that'd be pretty much it. I wouldn't really have much marked on my chart in terms of POIs at this moment, and I would just play price forward. Okay, so now we have a bit more development. What's the time is this? Coming into Frankfurt Open, not quite 7 a.m. yet, but what do we have? We have that second bearish IBOS, okay? So now, we have a confirmed break of structure, and these zones become higher confidence because they've actually led to something, somewhat significant. So if we look back, you see how all of these POIs are basically mitigated, right? That zone's already done. Then we have this buy to sell here. If we drag that to the right, we can see we've already had a mitigation, right? And then we can look at this. Now, when you get kind of tiny POIs like this, it's only a few pips, that's barely 3 pips in the M15, it's very, very small. So when that happens, I'll very typically kind of just take the buy to sell range. And if I can see that there was kind of that mitigation, I pretty much view that kind of area, that buy to sell area, as mitigated. So that gives me confidence to then follow that supply chain and be looking at this as that last injection of supply, that last injection of money that I'd be most interested in shorting from. So at this moment, once we have that M15 candle close, confirming the bearish IBOS, I would be setting my alerts on this POI to potentially look for price to come in for a quick short down into demand, okay? But if price mitigates demand first and then comes back up, you have to realize it's a lot lower probability because the objective could be complete, right? The internal structure may have now done its job and now price may be ready to target to the upside. So that's why I was saying it's really a lot higher probability to do this nearer the start of the move, okay? So once that happened, set my alerts at the POI and I'm interested to get short, okay? Now, price starts to pull back and I can see without jumping on a lower time frame that price would have come down here, right? Pull back up and then gone down. So I do have a entry model in my plan that when I have an M15 structural high, if that high gets swept and then I get my lower time frame confirmations, that is a valid setup within my training plan to then look for an entry from within here to then target that level. Now, this was a bit of a discretionary trade for me because for the rules that I have for structure, this is not a valid high on the M15, okay? Because all of these candles broke the previous candle's low. So for me, there was no fractal pullback just with the mechanical rules that I use. It might be different for you, but for me, it doesn't count. But when I was looking on the M5, okay, it was a very clear structural high and I liked it. So I used a bit of discretion this time and basically said to myself, if that high gets liquidated and if I get my lower time frame confirmations that tell me I need to confirm that it's a liquidity sweep rather than a break to show bullish intent, then I'll be happy to hit the trade, okay? And spoiler alert, that's what ends up happening. So price came up and it liquidated that high, which wasn't too much of a surprise because there was no inducement in the leg, nothing was built to the right, so the only available liquidity in that instance is behind the high, okay? So I was anticipating that high would go, and I was ready to either hit a short here on the liquidation of that high, if I got my lower time frame confirmation, or simply wait for the M15 supply zone to be hit, and then again, look for my lower time frame confirmations. Now, I took the entry on the M1 once my confirmations occurred. I'm not gonna show you that entry model, but I took the trade within here. I got tagged in. Unfortunately, I didn't get an opportunity. I didn't get the mechanical confirmation that I need to remove my risk. So I can't interfere, let it alone, don't get emotional, right? Price is drifting around the stop loss. I know you would think, oh, it's not looking good. It doesn't look great. It should have, it should be in profit by now. I'm just gonna get out. Don't do that. It doesn't matter how price looks. You need to have super mechanical rules for management because that's when typically emotions are their highest, right? For most people, when you see your P&L floating. So that's why I like to have my management as super hands-off as possible. And I simply do nothing, or I wait for my break-even trigger to go off with the rule that I'm using at the moment. And I didn't get that. So nothing. You just have to be patient, let it float around for about half an hour, wherever it was, 20 minutes, and then I got stopped out. Okay? No big deal. So do not just sit in your lower time frame, looking for a revenge trade or whatever. I constantly want to be, if I'm day trading, I want to be on the M15 because that gives me my bias and my narrative, and it gives me my trade ideas. I'm trading M15 ideas, but with lower time frame confirmation. Okay? So as soon as that lower time frame, setup is gone, I've stopped out or whatever, back onto this time frame, I need to be reassessing. What is the M15 idea? Does it still make sense? Okay, so at this point, where are we? Well, we're now in this supply zone, and the way that I view this is if this larger internal structure is going to stay bearish, and if we're going to get that next leg to a deeper swing pullback into the discount, into that 4-hour demand, then I was viewing this as kind of the last line in the sand, the level that sort of most likely is going to need to hold if we're going to go down, because I was viewing all of these supply zones as mitigated. Now, yes, the caveats are there is obviously a refined pivot level in here. Price could want to maybe hit that and then go, I accept that risk, or price might just want to sweep this high and then go, kind of similar to the idea I was trying to trade down here. I accept that, okay? But for me, this was the most probable POI that could happen. Now, when price got in there, I'm sitting on the M1 looking for my lower time frame confirmations, and it never gave it. It never gave the liquidity requirements that I needed, so it saved me from a loss. And as you can see, what happened? Price came into that M15 demand zone, right, this inside bar, mitigated it, and it pushed up with a decent amount of aggression. And then I believe with the next candle, there we go, we pushed up even higher. So for me at this point, again, this is why I don't sit on the lower time frames, okay? I reassess and go, right, what can I now see? If you feel like you're attached to a bearish bias, just ask yourself, well, what would the bulls be looking for right now? And sometimes that can really help you to be objective and see both cases, weigh up all of the analysis, and then make a much better objective decision as a trader of where you want to place your risk, if at all, okay? So at this moment, my bearish bias, or almost a bit of a tongue twister there, had now flipped more to bullish, okay? And I'll explain why. And a big part of the reason for this is not just because of what I'm about to break down here on the M15 and in this little section of price action, but because of the higher time frames. These are the most important thing. Like, remember, where are we on the daily chart? We are coming off the strong swing low at the very extreme, okay, in the discount of this range. We've had that shift in structure. We're seeing multiple times daily demand being respected, right? The path of least resistance in theory should be to the upside. So I'm already thinking longs. That's really the side of the market that is going to be most high probable, especially then when this is confirmed by the 4-hour chart. What are we seeing? We're seeing multiple breaks of structure, right? Supply failing, demand being respected. They are both heavily aligned. We've now pulled back down into the daily demand level. Ideally, we'd get a mitigation of 4-hour demand, which we didn't have at this point, which wasn't ideal. That would have been even better. But like I said, we know we don't have to, especially when we pull back into that sell to buy range. We know we can go. We have also now had what? A mitigation below the EQ. We pull back into discount. We know that's value for where bulls may be stepping in. Okay. Another big important confluence factor that then gives me more confidence for longs at this point is the liquidation of all of these Asian lows here, right? We know there's going to be a ton of sell side liquidity below these lows. Price has now dipped into here, and the theory is, or at least the theory that I hold on to, and that makes sense and gives me an edge in the market, is that if you're a large player in the market or large institutions and you need to get long, what do you need to get long? You need opposing liquidity, right? You need people selling if you're going to buy with minimal slippage. So if you're a big guy, where are you going to buy? You're going to buy behind lows, right? Where we know there's going to be a ton of sell side liquidity. So when those lows get liquidated and then I see aggressive buying pressure come in, based on that theory, what does that logically mean? It means that potentially there's a lot of, big guys stepping in there, institutional volume potentially stepping in, and I want to try and be trading in line with that, right? So it's another tick in the box for bullish confluence. We're now seeing that supply chain fail, especially we've cleared this out as well. So now I have a lot more confidence to get long. We're seeing demand be respected, right? We've come in, we've flipped this level of supply, be a bit clear on a lower time frame, but you can see how we came into supply, we reacted, we pushed down, but what did supply fail to do? It failed to make a lower low. Demand has now held, and now we've pushed up to the upside, okay? So when I saw this, all of that combined gave me strong confidence to go, okay, I think there's a decent probability, again, if I zoom out, that this M15 swing pullback, right? Nice corrected pullback is now finished. We've had the liquidation, the shift in structure, we got that bullish change of character, supply has now failed, demand starting to hold, aggressive V-shaped reaction after liquidating those lows. I'm happy to look to get involved and try and target that next swing run whilst accepting the risk that internal structure is still bearish at this point, right? We could still do that, but I accept the risk. But again, what gives me confidence, not just the intraday M15 confidence, but the overall bigger picture. Right? The overall bigger picture at this moment is overwhelmingly bullish. So that's why I can be more aggressive than perhaps I would be in other market conditions with wanting to look to get long, okay? So when you get this immediate momentum, London Open kicking in, and you see price moving up, where is the nearest sort of unmitigated POI in the M15? And it's these sell to buy wicks, right? We're following that, and it was a lot clearer on the M5, and the M5 is actually where I took this entry long, okay, where we can see we flipped that level of supply. So we got demand being respected, we react from supply to the left, it fails to cause a break in structure, it fails to cause demand to fail, right? Demand holds, and then we push up. So this is where that level of demand stepped in to overpower supply, right? To break through these highs, and this is where I set an entry. Okay, so I just set it on the 25% mark of this range and covered the low there. And I targeted, I meant to target 5R, I actually set my entry slightly wrong. And it was around just under 4.9R once we factor in commissions, but that was essentially it, okay? And that was towards the end of the session. Now, yes, I get this question a lot. I did leave a ton of profit on the table in this particular scenario, okay? But targeting fixed 5R works for me for a lot of reasons. On average, I don't want to talk too much about management right now because it's quite a long video already. I can maybe talk about this in another video, but the kind of high level view is one, from a day, you could find on paper, and when you backtest, whatever way you test, a way more profitable way of doing things. But when it comes to live trading, you need to find what can you perform live, right? There's a very big difference between on paper what's the most profitable and what you can actually execute in the most profitable way, right? And there's a few things we can dive into this, but the most simple part is what can your psychology handle, right? Because if I take 3 trades in a row that all run 7R, 8R, 9R, and I'm always targeting 10R, but then they all come back to 0 or whatever, that's really going to affect my psychology going into the next trade or the next day, where I might get FOMO, I might be frustrated, I'm going to make a decision and make a wrong decision. Whereas for me, at the moment, this might change, but right now, 5R is a very, very happy sweet spot that allows me to just, fill up that bucket, keep the water dripping into it, keep the account ticking over, and it works well for me. But yeah, I did leave a lot of profit on the table. Another key factor to this decision as well was that it was towards the end of the session, the London session, and there was high impact news at New York Open, and that easily could have gone, another way, right? We can see that when that news kicked in, it did go in my favor, but it could have easily gone against me. And also at that time, right, the M15 internal structure was still technically bearish, right? So there's every possibility that could hold and we could get another leg lower, particularly as we hadn't actually mitigated any higher time frame demand. Okay, so for the session, that was roughly about net 3.9R, right? Because I had the initial loss and then the winner over there. So yeah, it wasn't bad for the session. Did I leave some money on the table? Yes, but for me, that's fine. You've got to do what you can execute over a large sample size of trades. It would have been nice if I had onto it and targeted the daily high for God knows how much R, but that's not the business I'm in. I'm not going to do that, right? I need to do what works for me over a much larger sample size of trades. But kind of the main lesson I wanted you guys to take from this is having a mechanical framework, something that almost makes it enjoyable that every time you hop on the charts, right? Starting from a completely blank canvas, you know what to do, right? You're not and ahhing and thinking, how does it kind of look? How do I formulate my bias? Or that zone kind of looks good. That zone kind of looks good, right? You really want to know, I map my swing high and my swing low first on this time frame. Then I map the relevant POIs. That's in line with that bias, right? I'm not drawing boxes everywhere. It's just the nearest ones that make sense, that are most relevant. I understand my expectations, right? Let's quickly recap this trade. Daily chart. We have the bullish bias because we pull back into the extreme demand and we're now expecting that next leg to go to the upside. Currently for the day, we were actually sitting within a supply zone, but what do we know? We know when order flow is bullish, those supply zones are just reaction points back into demand to go. So that gives us confidence that if we pull back into demand, we're happy to trade against that supply, right? Exact same thing on the 4-hour chart. Find the current swing range you're within. It's quite a tight range, quite a simple one. Only one POI that we could look to get long from, but we are within daily demand, right? You can see the sell to buy range there. So we know we don't have to pull all the way back down. I know for some of you guys that use imbalances, fair value gaps, whatever you want to call it, you could say that mitigated, fine. Maybe that's the concept you use. For me, I see it as a sell to buy range. I just see it as a demand range. Horses for courses, whatever works for you. Just be aware that price doesn't have to hit certain levels. And then if you get your lower time frame confirmations, you can get involved, right? Rather than always just waiting for extra confirmation. And then for the M15, we're trying to play that. We're trying to play the swing pullback phase down into the discount prices and demand. And then if we get our confirmations that potentially that swing higher low is in place and that next bullish swing leg is going to occur, boom, we can get in, accept the risk, of what the bearish confluences are, be aware of them, okay? And if it's enough positive confluence, then you can take an informed decision to, put your risk on that trade idea. So initially, tried to play a short from within here, quite an aggressive one, but I was happy to do it. Didn't get any lower time frame confirmations from there. That's okay. And then once we broke out of there, supply chains now failed. I can see the big liquidation of this low, aggressive V-shape from discount prices. Just constantly seeing demand being held. I was happy to get involved, accepting the risk that I could have been completely wrong, and we could have got another leg down to demand. And there we go. So yeah, have that framework, know what you're doing, look for the same things every time, identify nearby POIs, identify your liquidity requirements, set your alerts, be patient, be objective, do not be sitting on your lower time frame, always have whatever your medium time frame is to know what you need to do, and then we can go. So if you took some value from that, please hit subscribe and watch one of these next videos to make an instant improvement to your trading.